Welcome back to the Bullish Bounce, where I like to provide information that may help us all get through these tough financial times. In today's video, we're taking a bit of a different route, and I'm going to cover one company that I think could beat out the S&P 500 over the next 5 years. So today we are going to cover Google and how the last few months have really placed Google in an interesting position. Currently, the company is priced as if we're going into recession. However, if we manage to avoid that in the United States and most of the developed world, then Google could present to us a really nice opportunity to make maybe 30 to 50% over the next couple years. So overall, we're looking at about the last year and a half on this price chart. And during that time, since February of 2024, we would actually have the same stock price as today. But something that is reassuring to see is that yes, we do have periods of around 3 months where the stock price goes down 25%, but repeatedly we see Google recover from that, and we see an increase of around 30% in a period of around 4 to 6 months. So the key question becomes, are we going to see Google rebound like it always has done in history, or is this the beginning of a long bear market in Google's stock price? Zooming out all the way back to July of 2020, you see here that Google does have the potential to go through really poor times in the market. So I believe it fell around 50% from the start of 2022 all the way to the bottom around the start of 2023. So over a period of a year, you lost half of your money investing in Google. And really during those times, Google is discounted as an investment because of recession risk. Google makes most of its money through advertisement. So if we expect the economy to do weak in the next couple years, maybe people just don't have the money, businesses have no money to advertise, then we should see revenue at Google go down and therefore profits collapse. So if we expect profits to go down 30% for Google, then overall the stock price goes down 30 to 50%. Because you also get punished in terms of valuation. Before I start talking about the future, let's just get a good understanding of the long-term health of Google as a company, and that allows us to try and predict what's going to happen over the next few years. So the first chart I want to go through here, more of the financials, is the revenue picture at Google, and we have this nice clear trajectory of a constant increase in revenue growth. So we have 20% growth that was average from really 2010 all the way through to 2022, but Google as a company has become very mature. So now revenue growth rates are hovering at around 10% growth per year, which is still very healthy and very attractive. You could still call Google a growth company. Looking at the net margin, we have almost record profit margin levels. At the moment, we are seeing around 30 cents of profit, final profit per dollar of revenue earned. And I believe this is going to continue getting healthier in the future based on the different business mixes we are seeing at Google, putting together that records amount of profit margin as well as revenue. You see that net income is absolutely exploding at Google. And by the end of this year, we're expecting around $115 billion for a yearly net income rate. Usually when companies report how much profit they're making, they do it in terms of a earnings per share number. It depends how many total shares exist out there, but we're also dividing that by less and less shares every single year. At the moment, Google is going to retire about 3% of the total shares outstanding. That arbitrarily increases our earnings per share by 3%. This year, we're only expecting profit growth of around 11.5%. And in the longer term, we're looking at 13% growth rates in profit per year. And overall, that places us at a 12-month forward valuation of around a 17, because we've already seen one quarter pretty much over in 2025, and a 17 forward P ratio. So in other words, $17 paid for every dollar of profit in the next 12 months. That's a pretty decent place to be buying Google. If you did that throughout the entire company's history, then you would have made an insane amount of profit. And even if we look only at the last couple years, what I've done here is I've just placed the forward P ratio number on the price chart at each point. And what you're going to see is roughly every time we've hit 17 as a forward P ratio on Google, that has been a bottom in the short term for Google's stock price. So this gives us a really nice short-term target to buy Google. Now the chart's a bit old. In the last month, Google's collapsed in stock price. So we are around 17 at the moment, and we usually increase until we hit around a 20 to 23 PE. So if we see that trend continue, that gives us around a 30% upside for Google in a very short period of time. If we look out a year, maybe that's a 50% upside in the company's stock price. And every year we go into the future, we can basically add on 15%. And that's just to make up for future profit growth in the company of around 15% each year. All of that sounds pretty positive, and that's why Google is one of my favorite investments right now. But we do have a pretty big downside potential because of the tariff war that has emerged between really Trump and the rest of the world. If we see the flat 10% tariffs on pretty much every country around the world, importing goods into America, the 145% tariff on Chinese goods, maybe that's enough to cause a global recession. Now, Google's not directly affected by tariffs really at all, maybe a 1 to 2% impact just in terms of the cost of building their data centers. But basically Google's not really affected directly. It's more of a secondary effect because of these tariffs. If small business is failing, and those are the people that really buy Google ads, then that's less money that is going to flow into Google's pockets. But I just want to run through Google's individual business segments because some of them are quite sensitive to the economy, but we've got some really exciting growth prospects that will actually protect Google as a investment. So first up, I just want to run through the different segments here. This is from the income statement for the last quarter only in 2024. And really the top half of this table is really all Google services. So we have different things like Google Search and Google Ads that are growing at roughly 13% at a yearly clip, the last updated earnings. However, we have things like Google Network, which are just the little annoying ads that you see on websites. That is actually having a decrease of 4% in revenue over a year's time, and that's only expected to continue to shrink over time. So overall, we would see Google advertising and subscriptions, all of that averages out to around a 10% revenue growth rate. However, we do have a very exciting Google Cloud business, which is pretty much about 10-15% of the total revenue. That is growing at 30.5% at a yearly clip. That's extremely exciting. One, because it's actually somewhat insulated from the economy. Google Cloud is paid really business to business income. Big players like your Walmarts, your Netflix, all these large companies pay to have their data stored online. They also do data analytics. They also do data security. So we could see that revenue growth for cloud grow 20%. On average going into the next 5 to 10 years. That run rate is extremely long, but we also have something called other bets at Google, and the far majority of that revenue is going to come from Waymo, which is the self-driving robotaxi network, which is actually booming right now. It's very impressive, and that's really about 5 years ahead of what the Tesla robotaxi network is currently at. At the moment, Waymo self-driving taxis are operating in Phoenix, San Francisco, LA, and Austin, but there's also plans to, in the next few years, develop in Atlanta, Miami, and also Tokyo. If we look at a graph of how many Waymo trips are currently getting produced, we are moving at a logarithmic trend. In other words, about every year, we're going up by a factor of 10. So we're expecting around 100,000 1,000 trips per week by the end of 2024. However, by the end of 2025, that's going to be around 1 million trips per week. And when we switch to the profit growth area of the income statement, we get an even more exciting picture. The Google Ads, also known as Google Services, the profit growth is 22.8%. That's very fast compared to about the 10% revenue growth of that segment. Again, Google Cloud was growing revenue at around 30%. The profit growth was 142% in 1 year. That is fantastic. The other bets is actually losing more money. It's losing 36% more this year compared to last year. But the money losing segment, mainly Waymo, could get a valuation of around $300 billion and get sold off to about 3 times the annual profit rate of Google as an entire company. Some of these money-losing ventures could be sold off in that way, or they could actually just hold Waymo, and eventually that robotaxi network could actually start to become profitable. So instead of losing $3 roughly on every trip that Waymo takes a passenger, maybe they'll start to make $1 per trip, $3 per trip, and overall, that could actually print out hundreds of millions of dollars of profit for Google every single quarter. We have this great potential to increase the revenue at Google, but many of its costs are actually holding quite stable because of the nature of Google's business. The online adverts, they've already built the data centers to host all their computers. They are trying not to hire too many more employees. Same with Google Cloud. All of that has a pretty stable cost basis, but all of that new revenue is just going to straight profit printing. So when we take into account that roughly 3% share buyback rate, as well as the around 10, 12, 13% revenue growth rate in the future, you can start to see these expectations of profit growth over the next 3 years, average at around 13%. We could easily beat that, maybe making around an average of 16, 17% growth rate in profits. So overall, when we're in this picture of very cheap valuations, again, almost rock bottom valuations, with that picture of revenue growth, profit growth, outperforming expectations, that's really setting us, looking again at that price chart of 2022, it's setting us up for that beautiful, strong rebound in stock price for Google. I have these 2 other videos about the tariff war that's erupting around the world. I want to thank my YouTube members who help sponsor the channel.